Hello my dear students. Now in this video I am going to explain you CA Final September 2025 mock test paper 1. Okay. First we are going to see case scenarios and MCQs. I will explain all the MCQs. When it comes to descriptive questions, answers are already available. You can go through the answers, not a problem at all. But when it comes to MCQs, answers are given, but how that answer came, the derivation for MCQ answer, that I am going to tell you in. Okay. Integra Solutions Private Limited is a professional firm engaged in providing consultancy and business advisory services. The company offers a wide array of solutions, including financial management, project advisory, business mergers, business valuations, and related services. During financial year 24-25, Integra Consulting rendered various professional services, earning gross receipts totaling 90 crore rupees. This was the company's first year of operations, and it believes that certain statutory compliances may not have been fully adhered to. Additionally, during the year, due to pressing business exigencies, the company received various loans in cash from different vendors, which are as under. See, if any cash loan is taken, if amount of cash loan taken is 20,000 or more, it is violation under section 269 SS and penalty will be levied under section 271D. Correct? So here cash loan was taken 28 lakhs, it is more than 20,000. 27,000 was taken, it is also more than 20,000. And next 16,000 was taken, which is less than 20,000. So this is more than 20,000. This is also more than 20,000, but this is less than 20,000. So in these two cases, penalty will be levied under section 271D. Sir, how much penalty will be levied? Penalty is equal to amount of cash loan taken. So here like 28 lakhs and 27,000. Both amounts will be levied as penalty. Okay. Further, Integra Consulting Private Limited made following loan repayments during the year: 15,000 to Mr. Santosh on 15th July 2024 in cash. See, on the date of repayment, outstanding loan plus interest, it should be less than 20,000. If it is greater than or equal to 20,000, then repayment should be done only by way of bank transaction. Repayment should be only by way of bank transaction. It should not be by way of cash transaction. Okay. So considering this, see, on 15th July 2024, already 28 lakhs loan outstanding is there. Now, when doing repayment, repayment should be made only by way of bank transaction. Here, 15,000 repayment is done not by way of bank transaction, but by way of cash transaction. So, this is not allowed. This is 269T violation. If there is any violation under section 269T, then penalty will be levied under section 271E. Okay. 2,50,000 paid to Mr. Santosh on 15th August 24 through account payee check. Account payee check means bank transaction allowed as deduction. Next 21,000 to Mr. Santosh on 19th September 24 through RTGS. RTGS means again bank transaction allowed. 12,000 to Mr. Santosh on 17th October through crossed check. Even crossed check is also considered as cash payment. On 17th October 2024, already by 17th October 2024, already loan outstanding is there. Loan outstanding is more than 20,000 rupees. So this should not be done by way of crossed check payment. That should have been done by way of bank transaction. As it is done in the form of cash payment, this is also violation under section 269T. So for violation under section 269T, penalty will be levied under section 271E. How much will be the penalty? 15,000 plus 12,000. 27,000 will be the penalty. Okay. Integra Consulting Private Limited has also received an amount of 2 lakh rupees per services rendered to Mr. Soham through bearer check. See, there is one section 269 ST which says you should not receive in cash 2 lakh rupees or more with regard to any transaction. Here 2 lakh rupees is received. Again, this is violation. Also, he received cash of 90,000 for services. The cash of 90,000 is less than 2 lakhs. So, this is not a violation. You can see what is the amount of penalty, if any, which would be leviable on Integra Consulting Private Limited for loan in cash from various vendors. See, if loan is given in cash, how much is the penalty? 28 lakhs plus 27,000. So 28 lakh 27,000 is penalty under section 271D. Amount of penalty leviable on repayment of loan to Mr. Santosh. See, on repayment of loan, how much is the penalty? 15,000 and 12,000. 27,000 is penalty under section 271. Next, has Integra Consulting Private Limited violated any provision? Yes, it violated provision. 2 lakh rupees it should not receive in cash, but it received in cash. So as contravention of 269 ST on receiving amount of Mr. Soham, penalty 2 lakh under section 271 DA. However, for next transaction 90,000, as it is less than 2 lakhs, there is no violation. No contravention on receiving payment of from Mr. Manoj. Okay. What is time limit for filing tax audit report? See, for tax audit report, due date is 1 month prior to ITR filing due date. So, ITR filing due date is 31st October. 1 month prior means 30th September. So, on or before 30th September, it is to be, audit report is required to be submitted. How much is penalty? 0.5% of turnover or 1,50,000, whichever is lower. How much is the turnover here? You can check. Turnover is 90 crore. 90 crore into 0.5% means 40. 1 second. So 0.5% means 45 lakhs or 1.5 lakh, whichever is lower. That means penalty will be 1.5 lakhs. Okay. This is the answer. Case scenario 2. Mrs. Vandana, an Indian citizen and non-resident in India, furnished following information for previous year 24-25. Dividend from Yashraj Films Limited, an Indian company of 1,85,000. Interest on debentures of Videocon Private Limited. See, basically, she is Indian citizen. She is also non-resident. So she becomes NRI, non-resident Indian. Okay. In case of NRI, with regard to foreign exchange asset, if foreign exchange asset is purchased in convertible foreign exchange, then from that foreign exchange asset, if any investment income is received, on that investment income, what is the tax rate applicable? 20% is the tax rate, and investment income is taxable on gross basis. No deduction will be allowed. Okay. So subscribed in convertible foreign exchange of 2,15,000. she incurred interest on loan taken for purchase of YRF Limited and for purchase of debentures of Videocon Private Limited. On 15th March 2025, she sold debentures of Jargon Limited for 22,75,000 for uh, which were subscribed in convertible foreign exchange on 10th June 2026 in dollars equivalent to 7,85,000. She paid commission to a broker. On 30 April 2025, she reinvested the sale proceedings of debentures of 8,40,000 for purchase of listed shares of an Indian company, Fortune Prime Limited. Now, what is the amount of dividend taxable in hands of Mrs. Vandana? See, it is foreign exchange asset, right? On foreign exchange asset, whatever the dividend income is there, on such dividend income, it is investment income, 20% tax is applicable. So, 1,85,000 is taxable on gross basis at the rate of 20%. So 1,85,000, 20% plus 4% HEC. So 20.8%. This is the answer. Next. Assuming for the purpose of this MCQ that Mrs. Vandana is a resident in India for previous year 24-25, determine amount of dividend taxable in her hands and at what rate YRF Limited is required to deduct TDS. See, if she is resident in India, normal provisions are applicable. From dividend income, expenditure is allowed. How much expenditure? For earning the dividend income, whatever the interest is there. How much is interest? Interest on loan taken for shares is 45,000. So actual interest 45,000 or 20% of dividend income. 1,85,000 into 20%, 37,000. Whichever is lower. That means 37,000 will be allowed as deduction minus 1,80,000. 1,48,000. Whatever this 1,48,000 is there, this is taxable at normal tax rates and TDS rate is 10% under section 194. Okay, so TDS rate is 10% and 1,48,000 is taxable if she is resident in India. What is the amount of interest on debentures of Videocon Private Limited taxable in hands of Mrs. Vandana and at what rate? See, interest on debentures. Videocon is a private limited company, so it is not a foreign exchange asset. So normal provisions are applicable. What are normal provisions? As she is non-resident in India, section 115A gets attracted. How much is taxable as per section 115A? As per section 115A, how much is taxable? Like as per section 115A also, interest income is taxable at the rate of 20% without any deduction. So here interest income is taxable at the rate of 20%. Answer for 7A, you can see. It is taxable at the rate of 20%. What would be the amount of long-term capital gain taxable in hands of Mrs. Vandana? We need to calculate long-term capital gain. How much is full value of consideration? Full value of consideration is 22,75,000, correct? From that, we need to reduce transfer expenses. Whatever the commission paid is there, that is transfer expenses. How much are transfer expenses? Transfer expenses are 8,000. So how much is net consideration? 22,75,000 minus 22 lakhs. From this, we will reduce cost of equity. How much is cost of equity? They are purchased for 7,85,000. Now, how much is gross long-term capital gain? Gross long-term capital gain 14,82,000. From this, we can claim exemption. That exemption will be allowed proportionately. See, If 22 lakh 67,000, if net consideration is totally reinvested, total capital gain will be allowed as exemption. Okay. But how much is reinvested? Amount reinvested is only 8 lakh 40,000. Now, how much exemption is available? You can do cross calculation. 5,49,131. So how much is net long term capital gain? Net long term capital gain will be 9,32,860. That is the answer. So this is the answer, 9,32,008. Next, case scenario 3. Safe World is a charitable trust registered under Section 12AB with its main object of providing education to the poor. During previous year 24-25, it received 80 lakhs as voluntary contribution. The trust also borrowed 40 lakhs on 1st July 2024 from Indian Bank to purchase land for construction of a school building where it can carry out its functions. See, if any loan is taken and if that loan is used for any revenue expenditure or capital expenditure, loan amount will not be treated as applied. Whenever that loan is repaid, repayment of loan will be treated as applied. Correct? The trust repaid principal of 10 lakhs to Indian Bank on 31st March 2025. The loan taken will not be treated as applied. This 10 lakhs will be treated as applied. The trust incurred revenue expenditure of 17 lakhs and capital expenditure of 60 lakhs towards purchase of land for construction of school building during previous year 24-25. Out of revenue expenditure of 17 lakhs, 15 lakhs was paid during previous year 24-25 itself. Out of remaining 2 lakhs, 1 lakh was paid in April 2025. See, how much is the revenue expenditure? 17 lakhs. Out of 17 lakhs, 15 lakhs was paid in current previous year, right? So this will be allowed. That will be treated as applied. But remaining 2 lakhs, see, before 2 months before ITR due date, if they make application to income tax officer that they will use this money, they will apply this money in the next year, then it will be allowed as deduction. But in the question, no information was given whether application was made to income tax officer for the purpose of deemed application in next current previous year. That application was not made. So this 2 lakhs is not treated as applied. Next. During 24-25, the trust also paid 3 lakh towards revenue expenditure incurred during previous year 23-24 and 1 lakh towards revenue expenditure incurred during 22-23. See, there is explanation. Explanation to section 11 says that whenever expenditure is actually paid, then only it is treated as applied. So 23-24 expenditure, 22-23 expenditure, they are not paid in those years, but they are paid in 24-25. As they are paid in 24-25, they are allowed as deduction in, treated as applied in 24-25. Okay, applied in previous year 24-25. Even this 1 lakh is also treated as applied in previous year 24-20. Next, trust also received 30 lakhs by way of corpus donations during previous year 24-25, out of which it deposited 25 lakhs in post office savings bank account. Trust also withdrew 5 lakhs from post office savings bank account. See, out of 30 lakhs, 25 lakhs was invested in safe mode of deposit under section 11.5. But 5 lakhs was not invested in safe mode. So whatever this 5 lakhs is there, this is treated as income under section 115 BBI and it is taxable at the rate of 30%. Okay. The trust also withdrew 5 lakh from post office savings bank account maintained for depositing corpus fund and applied towards purchase of land for construction of school building. See, from corpus fund, if you take any money and if you apply that money, it will not be treated as applied in current previous year. The year in which you pay back the money to corpus fund, in which you replenish the corpus fund, in that year it will be treated as applied. So in current previous year, we took money from corpus fund. Whatever the money taken from corpus fund, it is not paid back in current previous year. So it is not treated as applied in current previous year. It will be treated as applied in the year in which that money is paid back. Okay. So from 25 lakh rupees, 5 lakh is withdrawn, correct? It will not be treated as applied. It will be treated as applied in which it is paid back. Okay. The trust has donated to EdCare, another trust registered under section 12AB with main object of providing education to poor, 12 lakh out of its current year income. See, donation given to another trust. Only 85% of donation is treated as applied. How much is 85%? 12 lakh into 85%, 10 lakh 20,000. 10.2 lakhs will only be treated as applied. Trust has applied for the first time 2 lakh out of its current year income for medical treatment of brother of the trustee. See, if any amount is applied for benefit of specified person, in that case, like that amount will be treated as income and it is taxable at the rate of 30% under section 115 BBI. Okay. So from the information given above, choose most appropriate answer to the following questions. What would be the application of the trust for previous year 24-25 excluding unconditional accumulation of 15%? See, mm, see 10 lakhs is paid for repayment of loan. So it will be treated as applied. So repayment of loan, how much is repayment of loan? Repayment 10 lakhs, that will be treated as applied. Hmm. Revenue expenditure 17 lakhs. Out of 17 lakhs, only 15 lakhs was paid in current previous year. So only 15 lakhs will be treated as applied. Revenue expenditure 15 lakhs. Capital expenditure 60 lakhs. See, capital expenditure is 60 lakhs. But out of 60 lakhs, 40 lakhs is loan na. We need to remove it. Next, 5 lakhs is withdrawn from corpus fund. So it is not treated as applied. It will be treated as applied in the year in which it is repaid. So that will also be reduced. How much balance is paid? 60 lakhs minus 40 lakhs minus 5 lakhs, 15 lakhs. In 24-25, 3 lakhs belonging to 23-24 and 1 lakh belonging to 22-23 are paid. So, earlier year expenses paid in current previous year, they are treated as applied on cash basis. Okay, the year in which they are applied. As they are applied in 24-25, they are treated as applied in 24-25 even though they belong to 23-24 and 22-23. So, expense of 23-24 and 22-23. How much? 3 lakhs plus 1 lakh, 4 lakh. Next, last donation given to another trust with same objects. So 10.2 lakhs, that will also be treated as applied donation to another trust. How much is total? 10 plus 15 plus 15 plus 4 plus 0.2. 54.2 treated as. Okay. So the answer is 54 lakhs. if trust does not get its books of accounts audited before specified date. See, if every trust whose total income is more than basic exemption limit, total income before claiming exemption under section 1112, if it is more than basic exemption limit, then trust is mandatorily required to get its books of accounts audited. If trust do not get its books of accounts audited, then benefit of section 11 exemption is not available. Generally, capital expenditure is allowed as deduction based on section 11. Capital expenditure will not be allowed as deduction. And donation given to another trust, that is the benefit which is available under section 11, that benefit is also not available. So both capital expenditure incurred on account of purchase of land and amount donated to healthcare fund would not be allowed. This is the answer. See, once you violate the provisions, if you do not get your books of accounts audited, then section 11 exemption will not be available. If section 11 exemption is not available, capital expenditure is not treated as applied. Donation given to another trust, 85%, it will not be treated as applied. Okay. What is the amount of income chargeable to tax under 115 BBI? We have discussed. 5 lakhs is taxable under 115 BBI and 2 lakhs is taxable at the rate of 30% under section 115 BBI. So total 7 lakhs is taxable under 115 BBI at the rate of 30%. What is the quantum of penalty which can be levied under section 271 AAE? See, benefit should not be given to specified person. If benefit is given to specified person, the amount of benefit given will be levied as penalty for the first time. If the same offense is committed second time, the penalty is 2 times the benefit given. Here it was said first time that offense was committed. So penalty is equal to amount of benefit given. Here amount of benefit given is 2 lakhs, that will be levied as penalty. Okay. Arav Textiles Private Limited is a manufacturing company engaged in production and export of high quality textiles and leather goods. Company commenced operations in April 2023 and during its first year of operations, it experienced rapid growth, achieving significant turnover. While preparing for the statutory compliance review in January 25, the management of Arav Textiles discovered that it had failed to pay TDS amounting to 52 lakhs per first quarter and failed to pay TCS of 85 lakhs on sale of goods to a trader, which takes place in the month of August 23. To avoid prosecution, company's legal team advised filing a consolidated compounding application. See, if you have done any wrong, if you have committed any offense, there will be penalty and prosecution. To escape from prosecution, you can make application for compounding of offenses. If you make application for single compounding of offense, you need to pay application fee 25,000. But here two offenses are there. When you are applying for compounding of consolidated offenses, then 50,000 fees is required to be paid. So the answer here is 50,000 application fees. 13B is the answer. You can check. B is the answer. 14. Global Link Trading Private Limited withdrew a total of 1.8 crores. See, whenever any amount is withdrawn, TDS is required to be deducted as per section 194 and cash withdrawals. But TDS will be deducted on withdrawal in excess of 1 crore. So more than 1 crore, how much is deducted? 80 lakhs, right? So on 80 lakhs, 2% TDS is required to be deducted. 80 lakhs into percent, 1.6. In the same financial year, an office diplomatic mission of Canada, see, embassy of another country, if it withdraws money, TDS is not required to be deducted under section 194N, because if money is withdrawn by foreign embassy, TDS provisions under section 194N are not applicable. So in this case, no TDS is required to be deducted. So what will be the answer? This is the answer. First one, on 80 lakhs, 2% TDS, but no TDS on cash withdrawal by diplomatic mission. Okay. Zenith Global Limited, a company incorporated in UK, has established a license office in India after obtaining necessary approval from RBI. The license office is primarily engaged in promoting parent company's business and facilitating communication between Indian customers and UK headquarters. The license office operates strictly within the guidelines laid down by RBI and does not undertake any commercial trading or industrial activities in India. For financial year 24-25, by what date Zenith Global Limited should furnish the prescribed statement? See, every non-resident who is having license office in India, they are required to submit a annual statement to income tax officer generally within 60 days from end of financial year. But in 24-25 there is an amendment. On 17th February 2025, circular was issued by CBDT. Circular, through that circular, they made the amendment. Earlier, within 60 days from end of financial year, information is required to be submitted. But now, within 8 months from end of financial year. See, 24-25 will end on 31st March 25. From 31st March 25, 8 months means April, May, June, July, August, September, October, November. By 30th November 2025, it is required to be submitted. Okay. So within 8 months from end of financial year, this is the. So we have discussed all MCQs. Questions, you can go through the questions. Answers are clearly given. Okay. For every question, how that answer came, that answer is very clearly given. Still, if you get any doubt, please ask me. Okay. There is my Telegram group. Through that Telegram group, you can ask me. Okay. Thank you. Bye.